James, analysts mostly positive. They like the fact we got 2020 out of the way and a tax burden out of the way. Give me some clarity as to what regions of the world you see recovering fastest and what that means for sales.
Yeah, in terms of sales recovery, clearly the level of lockdown is going to remain a factor. And so, yeah, we see places like China a little further ahead in the recovery, given the containment of the virus there and the lower level of lockdowns. Clearly, as we see 2021, we've set ourselves a corridor of growth. We believe we can grow within it, although there is some near-term uncertainty as to exactly when the lockdowns will come off and how getting back out and about for people will take off. But I think we'll clearly see the developed countries like the US, Europe and the UK start to move to a better place into the summer. And then the developing markets, I think, will be more of a mixed experience as we go through the year. But what we believe is ultimately this combination will allow us to get back to growth, to emerge stronger from the crisis, and to get back to innovation and marketing and top-line led growth.
James, how closely do you think your performance is going to be correlated with vaccine rollouts? I.e., do you get up in the morning and look at what is happening and think, do you know what, we're probably one day closer to bars and stadium being open again? As you look at what is happening in terms of your performance, people's confidence as well, do you see those two things being linked, and how closely?
Clearly, particularly for our away-from-home businesses, the level of lockdown is a very important factor and has been for the last 12 months. And so to the degree to which the vaccination programs allow less lockdown is going to be a driver of sales. Absolutely. Now, clearly, one extra day or one extra week's vaccination doesn't get us there. We need to reach enough of a critical mass where the governments feel able to start relaxing the lockdown. So we need the vaccination programs to run for a while in the expectations that the lockdown restrictions will eventually start coming down. I'm fully expecting them to be stair-stepped in their reduction rather than they're there one day and the restrictions are gone the next day. And so I think there will be a move towards the summer to less restrictions and therefore a growth, particularly in the away-from-home channels. And it will be an important factor for our business. I mean, don't know exactly when it's going to happen, but we'll grow through it.
Well, and obviously, getting to that point is critical for all companies. And I wonder, as we recalibrate what vaccines really mean for reopening, and it feels like the market and economists are recalibrating for a more staggered open or a controlled open or a virus that's going to be with us for a while. Do you anticipate having to rethink layoffs or reductions in the coming months? Like, what's the time where you're like, all right, I got to go back to the drawing board and think about this?
Yeah, clearly, I think the environment of the vaccine is, I think we're going to come to a point of seeing it as more endemic and living with it for some period of time and a sustained vaccination and booster program going into the future. In terms of setting up our business for that perspective, look, we took a lot of very difficult decisions in 2020 to how to allocate our resources. We brought forward some of the transformation of the organization agenda that we knew we had, and we did it in 2020. So as we come into 2021, we feel we've made the tough decisions on setting the organization up for the future of growth that is both adapted for growth and consistent with a view of where this virus is likely to be in terms of living with it at some greatly reduced level for a number of years. So we think we're set, we're ready to grow, and we're ready for 2021 and the future.
James, you said you're going to reduce the amount of virgin plastic that you use in your bottles by 20%. That ramps up further down the road. James, how many Coke bottles, plastic Coke bottles, are produced in the world every day? And do you think 20% is enough?
That's a 20% reduction in virgin plastic. And clearly our goal is a world without waste. So we want to obviously we're making our packaging all recyclable. We're almost there. And what our objective is to help promote and work with other companies and governments around the world and in consumers to make sure we can collect back a bottle or can for every one we sell. If we can get that and we can collect them back, then we can get to a circular economy in the packaging that will even accelerate our ability to use less virgin material, whether that be plastic or glass or aluminum. And we will actually get to a world without waste. The biggest gap is driving up the collection rates so we can bring the bottles in, but it's absolutely doable, and this 20% reduction is another big step on the way to a world without waste.
How do you do that? How do you recycle all that plastic? Like, what do you need to make it more efficient and step it up?
Sorry, say that again, I couldn't hear you.
So how do you scale that up? How can you get there faster? What would you need?
Yeah, the quickest way to do it is improve collection rates. There are countries in the world where we get back over 90% of the bottles, and the technology exists to easily remake them into food and beverage grade packaging. And so you've got a circular economy. We have countries out there in the world where 100% of the materials we use for the bottles are made from recycled PET, so a fully circular economy. The principal thing that needs to change is the rate of collection, and that's very important. For instance, in the United States, we need to drive up the collection rate of the bottles and the cans, and all the technology to then create a circular economy around these packaging materials already exists. It's collection rate. That's the #1 driver.
James, just one more question on this from me. Evian has promised that it will use 100% recycled plastic in its bottles by 2025. My understanding is that you are at 50% by 2030. Why that later number? Why that lower number?
Yeah, there are some companies with brands that have decided on one of the brands in their portfolio they'll use 100%, and we are talking about our entire portfolio at 50% recycled plastic. The simple fact remains that recycled plastic is also a commodity that people compete to buy. We compete to buy it, but there are many other uses of recycled PET. It's the highest value plastic in the value chain, and people then use it whether it's for sports clothes or carpets or lots of other things. So often it's our ability to acquire those materials at competitive prices versus virgin, and that's what reduces our ability to use 100% of it back. But if we got it all, got all our bottles back and didn't have to compete with everyone else to use that recycled PET, of course, we would then be able to do 100% on everything.
And one more question for me on this topic. Guy and I are just both really into this kind of topic for most companies. We have a question from a viewer that talks about emerging markets and how collection rates is just really hard, near to impossible. How do you fix that problem in emerging markets? I can see why something in the US or in Europe would be much easier to tackle.
Actually, it's actually not that way around. Actually, it's much easier in a way to drive up the collection rates in the emerging markets for the very simple fact that, sadly speaking, labor is cheaper. So rates of collection, whether we're talking about China or South Africa or Mexico, are much higher than the US marketplace. In the developed countries, it tends to require a much more formal infrastructure, often done with the local authorities, in order to drive collection rates up. And so the principal challenge in terms of getting the collection rates up is, for me, the US market would be top of my list, because actually many of these emerging markets, the informal markets already provide a market-based mechanism. And the reason it does is because those packages have economic value. A PET bottle or an aluminum can has a resale value, and therefore in the emerging markets there's a big industry to effectively collect them and bring them back and sell them into the marketplace, whether to us or other users of recycled PET or recycled aluminum.
Pretty surprised by that, James. Mm-hmm. That's interesting stuff, learning stuff here. Let's talk a bit about SKUs. Let's talk about brands you've got and which brands you're going to keep and which ones you aren't. A lot of the companies in the FMCG group that we've been talking to over the last few weeks have talked about slimming down their portfolios. Are you going to continue to do the same thing? Are there any names that you are potentially looking to cut as we go forward?
We made our decisions last year on which the portfolio rationalization. We went from some 400 master brands to just under 200. We believe that we have done an excellent job of focusing in on which are the brands with the best long-term potential taking out those that are weaker and without growth potential to create room for greater innovation. So yes, over time, we will find again brands and products that aren't fulfilling the aspirations we had for them, and we'll retire them. But I don't foresee another large exercise like the one we did in 2020 to bring down the portfolio. I think it's part of the decisions we made in 2020 to get ready for growth, to get ready for 2021 and the future. And we've done the work that we needed to do to set ourselves up with the brand portfolio.